Good morning. My name is Anva Mengsel. I work as a financial assistant in the Administration and Finance Unit of Directorate H, Sustainable and Secure Society, here in DG Connect. And I will focus in my presentation on the eligible costs. I will also explain which costs are not eligible. And I will explain the different types of projects. These are co-funded projects, and the reimbursement rate depends on the type of project. I will also go through the different cost categories. So indirect costs, direct costs, and then the categories that are most used in the projects, like personnel costs, subcontracting costs, travel costs, and so on. There are also certain things that you have to remember when you claim your costs. For instance, that the grant agreement is not for profit. And then some articles in the grant agreement refer to audits and controls and the financial consequences of these audits. So I will also have a look at that. And then in the second part, after the coffee break, I will explain more about the cost claims, the certificates on the financial statements, the payments, and the reporting. So this slide just gives an overview of where in the grant agreement you can find the important articles regarding reporting and payments. So in Article 4, this is about reporting periods, and the reporting periods are mentioned in your grant agreement, and it's normally fixed during the negotiation. Normally the reporting periods are 12 months, but they can be different. For instance, in case you have a project of 30 months, the last period could be 18 months. Then Article 2.4 sets the reporting obligations. So it stipulates the reports and the deliverables that have to be submitted, and this also includes the cost claims and the certificates on the financial statements. Article 2.5 sets the approval of the reports and deliverables and the time limit for payment, and this article also includes the obligation of the Commission to pay late interest in case of late payment. Then Article 2.28 is about the financial audits. The Commission can do financial audits during the duration of a project and up to 5 years after the date of the final payment. And then the last one is about the technical reviews and audits. So the Commission can initiate a technical review during the lifetime of the project to assess the work that has been done for the project. And this can also be done up to 5 years after the final date, after the date of the final payment. Then, first of all, it is important to remember that the CIP projects are co-funded, so part of the funding will come from the European Commission and part will come from you, from the beneficiaries in the projects. And depending on the type of projects that you are participating in, there will be a different reimbursement rate. So for the pilots, and it's the same for Pilot A and Pilot B projects, the funding rate is 50% of the eligible costs. Best practice networks get 80% of the direct eligible costs, and thematic networks actual costs, there the funding cannot finance the entire cost of the project, but it's limited to the costs for coordinating the network and implementing the network, and for the other participants it's limited to the personnel costs for elaborating the deliverables, as mentioned in Annex 1, and for the travel costs. Thematic networks financed by lump sums, they are financed by lump sums or flat rates based on scale of unit costs, and for these type of projects, no justification of costs is needed, but I will explain this more in detail later on. Then the maximum funding rate is mentioned in your grant agreement in Article 5.1, and even if in the end the total eligible costs for your project would be higher than that was initially foreseen, the funding rate that the Commission, the maximum payment that the Commission will make for the project to you will never be more than the amount that is mentioned in this article. So this is some more details for the thematic networks financed by lump sums. So there the coordinator gets 3,000 euros per year and per beneficiary for the 10 first beneficiaries, including himself, and 2,000 per year and per beneficiary from the 11 beneficiary onwards. There will be no additional funding for the 21st beneficiary and onwards. And then the other beneficiaries get 3,000 euros per year for the implementation costs, and all, including the coordinator, will get 5,000 euros per year for attending network meetings and network-related events. So for periods less than a year, the flat rate, the lump sum, is calculated pro rata, and this will, for instance, be the case also when a beneficiary joins the project or leaves the project during the lifetime of the project. And apart from these lump sums, no other costs can be declared. This is an example of a thematic network with 15 beneficiaries and a duration of 2 years. So for the 10 first beneficiaries, the coordinator will receive 30,000 euros, and then 10,000 for the remaining 5 beneficiaries. For implementation costs, the other beneficiaries will receive 3,000 euros, and for the meeting costs, they will all receive 5,000 euros per year. So this makes a total cost per year of 45,000 euros for the coordinator and 8,000 for the other beneficiaries. And as it's a project of 2 years, the coordinator will receive maximum 90,000 euros and the other beneficiaries 16,000 euros. So in these thematic networks, there is no definition of eligible costs, and only the coordinator has to submit a simplified financial statement, so the other participants do not have to submit any cost claims. There is no justification of costs required. They do not have to submit any certificates on the financial statements, and budget transfers are not possible. So eligible costs are the costs that you can declare to your grant agreement and for which you will receive funding. So first of all, it is important to bear in mind Article 20 of Annex 2 to the grant agreement, which gives the list and the rules of what kind of costs you can declare to your grant agreement. So first of all, there is the principle of actual costs. So this means that there actually has to be a cost for your project. This means that you cannot charge any estimates or budgeted or planned costs, and that you cannot charge any commercial rates either. So it's really the costs that your organization incurred for the project. And then, indeed, as I just said, the costs have to be incurred by your organization. You cannot declare the costs that have been incurred by another organization. So it really has to be your own costs. Then each project has a start and an end date, and the costs you can declare for the project normally has to be between these 2 dates. So we look here at the date that the costs occur in your accounting. So if you have cash accrual accounting, then the date that counts for the project is when it appears in the accounting. If you have, for instance, cash-based accounting, then you will normally put your costs into your accounts when you pay the invoices, and that is then the date that counts for that type of accounting. So there are some exceptions to this duration. Well, normally you can only charge them during the duration of the project, but for the final review, the final reports and the certificates on the financial statements, the costs are eligible up to 60 days after the end of the project. But apart from that, it's really just only the costs that you incur during the duration of the project. So this means also that you cannot declare in your cost claims any costs for preparing the proposal or for attending negotiation meetings. So the costs must be in accordance with the applicable accounting standards and with the usual cost accounting practices. And this means that you should not create any special accounting for EU projects. It's your normal principles that you should use, except if it is needed to comply with the rules of the grant agreement. Also, if in your usual accounting you consider certain costs as indirect costs, you also have to consider them as indirect costs for the projects. The cost must comply with the requirements of tax and social legislation, and they must be reasonable and justified and comply with the requirements of sound financial management, in particular regarding economy and efficiency, and this refers to the standard of good housekeeping in spending public money. An important rule is also that the costs should be needed for the project. So if there would not have been this project, then this cost, you would not have had the cost. And you must be able to show that they have been recorded in your accounts. So you must have the necessary invoices and the proof that they have really occurred. And then finally, the costs should be indicated in the indicative breakdown of budget, so not only as an amount in your budget table, but also in the use of resources. You should mention the major cost items that you foresee. You don't have to be very detailed, just mention there the most important costs. This will make everything easier to show to, for instance, the auditors that it was really needed for the project. So what are these eligible costs and how can we categorize them? So there are two main categories. These are the direct costs and the indirect costs. And direct costs are costs that you can see that they are really happening for the project. So these are, for instance, travel costs, personnel costs, subcontracting costs, or consumables. And then you have the indirect costs. These are costs that cannot be directly attributed to the project, but they incur in a relationship with the eligible costs. So, for instance, the costs of renting your building or heating costs. In CIP projects, there are only flat rates for these indirect costs. So, and depending on the type of the project that you have, these flat rates for indirect costs are different. So for the Pilot A and Pilot B projects, it's now a mandatory flat rate of 30% of the personnel costs. For those of you that have participated in the early calls of CIP, call 2007 and 2008, there was still a choice between the real indirect cost model or the flat rate. But since 2009, you can only declare the flat rate for pilots A and B, so the flat rate of 30% of personnel costs. Then for best practice networks and thematic networks financed by lump sums, there are no indirect costs that can be claimed for the grant agreement. And for thematic networks actual costs, there is a mandatory flat rate of 7% of the direct costs, the direct eligible costs, minus subcontracting. And you have to request a lower percentage than these 7 or 30% if this is required, for instance, by your internal rules. And in that case, a special condition will be added to the grant agreement. So let's go on with the direct costs. When we look at the CIP projects, the largest category is usually personnel costs. And the main principle here is that the personnel should be working in your building and under your supervision and responsibility. Also, all the personnel working for the project must be paid in accordance with your normal practices. So there should be no special rate or special salary or special treatment for any of your personnel if they work for an EU project. The personnel must also be directly hired by your organization, so there has to be some kind of an employment contract, a temporary or a permanent contract with these persons. And you are allowed to declare personnel costs of consultants if they fulfill certain conditions. So you can find the cumulative requirements that need to be fulfilled here on this slide. And if you want to know more details about it, you can also find it in the Guide to Financial Issues. The consultants also have to work in your building and under your responsibility and supervision. And we allow teleworking if this is according to your normal teleworking rules. The costs should also be in line with the normal salary of your other personnel, and it should be based on the number of hours worked. If these consultants travel, they should also travel according to your travel rules. And if they generate any intellectual property rights, then these should belong to your organization. If these conditions are not fulfilled, then if, for instance, they are not working in your building or under your supervision, then we cannot consider these as personnel costs. Then they might be something different. It might be, for instance, subcontracting. For personnel, you need to have a reliable system to record the working hours. And if a person works in different projects, then this system needs also to show how many hours this person worked for each of the projects. Otherwise, it will be very difficult to prove how many hours that this person worked for the project. And in the end, all your personnel costs might be rejected for that. And you can find also the details how to set up this time recording system if you do not have one, but as you are already participating in CIP projects, I suppose you have one. But if you want to check if your system is good enough, you can find the details also in this Guide to Financial Issues. What is also important is the concept of productive hours. So productive hours are the hours that a person is normally working throughout a year. And they must be calculated also according to your normal rules. You can either use the standard number of productive hours for all your employees, or you can choose for an actual individual number of productive hours per employee. So there you have to calculate a figure which does not contain the annual holidays or illness or training, as this is not part of your normal of normal productive hours. So as you can see, here on the slide is an example. So we start with 365 days. We deduct 104 days for the weekends, and then 21 for annual holidays, and 15 for statutory holidays, and another 15 for illness and other things like training, for example. That leaves us with 210 productive days per year. And if you work 8 hours per day, you will, this will result in 1,680 productive hours per year. So how do you calculate now the hourly rate, and what is then the amount that you should put in your cost claims? You take the total annual costs for the person that is working for the project, so the salary plus the social charges, the holiday pay, the pension contribution, etc., and that you divide by this total annual productive hours. And then this is the hourly rate, and if you multiply that by the hours that this person worked for the project, you have the amount that you can put into your cost statements. So in exceptional cases, if you can show that average costs correspond to your usual accounting practices, then we will add a special condition to the grant agreement that allows you to do so. But the average cost methodology, this should be based on actual costs, and you should not use budgeted or estimated elements, and also in the calculation you should not include any ineligible cost items or any items that you would normally declare in other cost categories. So you cannot declare there the rate that you normally use when you work for third parties on a commercial basis, and you have to be able to explain how you obtained this average personnel rate. Then for SME owners, it often happens that they are working in their company, and that they are not really taking out a salary. So in that case, they can declare a flat rate, and this flat rate is based on the People program, which gives salaries to researchers that go and do research abroad, and they pay them according to these flat rates. And it depends on the country of residence, and the level of experience of the person. But if normally these SME owners do have a salary, even if it's, for instance, a minimum wage or so, then this salary has to be declared for the project as well. So you cannot change your practice just because you're working now for the EU project. So you can find this calculator when you click on the link in this slide. So then third parties. So there are two types of third parties. So with third party, we mean a legal entity that is working for the project, but that is not signing the grant agreement, but they are contributing to the project. So first of all, we have the subcontractors. And a subcontractor is an organization that is there because of the money. There is a business relationship between the beneficiary and the subcontractor. And there must, of course, be an agreement on how this is settled. And the contract also says that it's not allowed to cover significant core tasks with subcontracts. The tasks of these subcontractors should be identified in Annex 1 in the description of work, and the contracts must be awarded according to best value for money, transparency, and equal treatment. And you need to be able to show why these subcontractors are there. Did you select them according to your normal procurement rules, or is it the only one in Europe or in the world that can do these specific tasks? Or maybe you are always working for this kind of tasks with this company, and you have some kind of a framework agreement with them. And it's not because it's the name of a subcontractor is mentioned in Annex 1 that all these requirements are fulfilled. In case of an audit, you will still need to show that you really, how you selected it, and that it complies with the rules of the grant agreement. So another important thing is that between beneficiaries there cannot be subcontracting. And so the subcontracting tasks must be mentioned in Annex 1, unless it's really something minor, then you don't need to do that. But for the real big subcontracting tasks, this should always be mentioned in Annex 1. So let's move to another kind of third party, which is also doing part of the work, but which is not a subcontractor. It's actually to cater for a situation which already existed before the project, and which probably will continue to exist after the project. It's actually to recognize a link between two organizations which are always working together. For this call 6, it was for pilot A's, and there only European economic interest groups could be accepted as a third party, or if the entity was made of several legal entities, or if there is another entity who has delegated powers to a national administration or public body. And this is only for pilot A projects. For all the other instruments, this is for the call where you were in, call 6. The only case where a third party could be accepted is the case of the European economic interest groups. These third parties should also be clearly identified in Annex 1. The legal name should appear there, and the estimated budget for and the tasks of these third parties. So then you have two options, and the first option is that you have to choose if you want to have the third parties mentioned in the core grant agreement. And then this third party needs to go through all the processes just as for a beneficiary, so INEF and registration in the database. And in case if you choose to have it only in Annex 1, then you don't have to do this whole procedure, but still we will verify the legal existence of this third party. So if you use option 1, then the beneficiary provides for each of the third parties the financial statement, the certificate on the financial statements if this is required, and a summary consolidating both for the beneficiary and the third party. In the second option, so when you only have the third parties in Annex 1, and in Call 6, I think that all of the projects where they have third parties have chosen this option. So then you identify in your financial statement the costs that are related to the third parties. So it is a consolidated costs claim, and in the use of resources, you identify which costs are for your third party. And you also certify in the certificate, well, the auditors certify that all the costs claimed are claimed according to what was foreseen in the Annex 1 and in the grant agreement. So let's continue now with the other direct costs. So travel and subsistence costs for personnel working for the project is a direct eligible cost if they are in line with your usual practices and if they are recorded in your accounts. For equipment, you cannot declare the full amount of the equipment, but only the depreciation costs, because that is normally the cost that is in your accounting. So you should normally have a depreciation system in place, and you should not develop a special system just for the project. Equipment should be depreciated over the useful life, and at the end of the project, you should not declare for the project any remaining value. So just declare the depreciation cost over the lifetime of the project. If you bought equipment before the start of the project, then the depreciation costs are eligible if you still depreciate this equipment in your accounts and if you will use it for the project. If you share equipment between different projects, then you have to declare the share that you use it for this specific project only. And then consumables, they are only eligible after the start date of the project. And if it's your usual practice to consider certain consumables as indirect costs, then for the project you also have to consider them as indirect costs. So then I would like to remind you that there are certain costs that are not eligible for the grant agreement, and that these are clearly mentioned in the grant agreement. So some clearly identifiable indirect taxes and duties, in particular VAT, that is not an eligible cost. So this means that you have to charge to the project the non-VAT amount, and this applies also for travel, for instance. But if you can show that you cannot recover VAT, in that case you are allowed to declare the amounts with VAT. So other things that you cannot charge, for instance, are provisions for possible future losses or charges and any debts. And all your costs must be according to the 3E principle. So this means that your costs must be economical, they must be efficient, and so we're not allowing any excessive expenditure. So this means that, for instance, if you pay a very high salary to a junior researcher, that we can consider this as reckless and that the costs might be rejected. Also, for instance, if you pay for certain services or equipment significantly more than the normal market rate, then again we might see this as reckless expenditure and we might reject it. So this is because we always have to keep in mind that this is public money, it's taxpayers' money, and we have to make good use of that. So another important principle is, and you can also find this in Article 25.3 of Annex 2 to your grant agreement, is that what you get from the Commission cannot be a profit for your organization. And this principle is assessed at the level of each beneficiary. Another important article in the grant agreement is about receipts. So income or other funding coming to the beneficiary thanks to the project, this might have an impact on your EU funding. It might have an impact because of what I just explained in the previous slide, because you cannot make any profit. An example is, for instance, if somebody else, like the region or your country, gives you money specifically for the purpose of this project, then that is considered as a receipt, and you should declare this in your cost statement. There is a specific place in the cost claim where you can put this amount. At the end of the project, we look then at each partner, and if the funding plus these receipts is more than your total eligible costs, then we will reduce the funding. If you would, for instance, get a general grant and you, or an investment for your company, and you can do with this money what you want, it's not specifically for the project, then we don't consider that as a receipt. You should not report that in the cost claim. Another example of receipts might be, for instance, that you organize a conference and you ask income tickets to cover for the organization costs. This is considered to be a receipt, and you have, again, to declare this in your cost claim. But again, it will only have an impact on your funding if the funding plus then the income of these tickets is more than your eligible costs. The outcome of the projects, the intellectual property rights, they are not considered as a receipt because this is an objective for the project, and this would penalize your project if we would consider that as a receipt. So that is something that you don't have to declare in your cost claims as a receipt. We will not, it will not reduce your funding either. And as I already said, the calculation, if there is profit or not, will only be done at the end of the project. So, okay, that is the first part. We will now have a coffee break, and then after the coffee break, I will explain more about the reporting and the payments.
You want to take some questions now?
Yeah, maybe. So if you...
I have a question about subcontracting. Somebody told me that in FP7 you can also in-house consultant. Somebody told me that in FP7 you can also hire in-house consultants through a company. Is that also possible in ICT PSP?
Inigo, would you have the answer on this question right now?
Hello. Well, I think there's a slight difference between FP7 and CIP. In FP7, it's stated clearly that in-house consultant may be hired direct, are natural persons hired by the company, whether directly or through a third party, which the current employer of the in-house consultant. When in CIP is explicitly stated that it's a contract between the beneficiary and a natural person. So we don't foresee that there's an intermediary behind. So there's no another employee. Then the in-house consultant, let's say that is not an employer.
Just two actually detailed questions. So VAT is not eligible, but there are companies, there are beneficiaries in our project that cannot recover VAT, so they have to prove that they cannot recover it. How does this, what is the exact procedure? Because when they do their financial statement into the NEF portal, do they already have to submit some kind of document that says we cannot recover VAT, or what? What is the...
So they do not have to submit proof that they cannot recover VAT. They can just write in the use of resources if it's necessary, because I mean the amounts in the use of resources are not that detailed that it will show if this is VAT included or not. But they can just confirm that they cannot recover it, and then it's okay. It's just in case of an audit that they will have to be able to show that they cannot recover it.
Then just really also a detail, but it was a question asked by one of our beneficiaries. We have, for instance, a beneficiary who was organizing an event for the project, which was in the description of work, and the event took place in period 2, but some of the costs were incurred in period 1. And she asked me, well, when do I have to put them in my financial statement? Do I group them all together as one event cost in period 2, or can I already partially put them in the financial statement of period 1? That was something I was not quite sure about the answer.
Well, I think normally you should put the costs in the period when they occurred. So if part of it is in period 1 and part of it is in period 2, then I think it's the best to do like that. And also make sure, of course, that then in period 2 you're not again reclaiming the same costs as already claimed in period 1.
It was a specific question about receipts and contributions by third parties. In our project, we have a number of third parties outside the consortium agreement who are contributing to the project. Does that contribution count as a receipt? I mean, I'm looking at the guideline here. It says, if the contribution made by a third party is allocated to the beneficiary specifically for use on the project, the resource must be declared as a receipt, which seems to mitigate against the involvement of people outside the consortium, which seems slightly strange.
I mean, if they are third parties carrying out part of the work for the benefit of the beneficiary, and the cost they are incurring are a legal cost, of course, even though it's not a receipt. The financial regulation defines what's to be understood as receipt in the form of contributions in kind or contributions or financial contributions from third parties. And in that case, the contributions in kind or financial contributions made by third parties to beneficiaries in a project are considered as receipts when they are used solely for the purpose of the project. I mean, an expense incurred by a third party by contributing to the objectives of the beneficiary under a project is a receipt unless it's declared as an eligible cost.
Sorry, I didn't quite understand that last point.
We have, if you want, we can do later. But let's start with a legal definition of what's to be understood by receipt in the form of financial or in-kind contribution from third parties. So.
Sorry, this is a subject which is interesting also for us, so it would be interesting to, if we can also be part of the conversation.
I can speak up. I'm Martin Mai, project officer, FP7 project officer, yet from Luxembourg. So clearly your question only if those contribution to the project could be considered as asset, as a, you know, as if they considered a profit for the beneficiary. Only in that case this could be taken in account. In contrary, if you do some work for the benefit of the project as a whole, this surely cannot be counted as you know. So I think this is the distinction.
Which would have been my understanding, but the wording actually doesn't quite reflect that. Logically, I absolutely agree, and that's what I'd understood. But as soon as I saw the presentation, the wording is slightly at odds with that.
I've got two more questions. One is about the excessive rates in personnel, and the other is around the actual reporting of the personnel costs. So question number one is there an average or an acceptable upper limit for person-month cost for a professional? We had the case of a Dutch partner who got effectively their day rate that they submitted reduced, I think, by about half. It was seen as excessive, and they got lots of evidence that in the Netherlands they have very high social security costs, and that the rate they wanted to basically submit was in line with the average for the profession in the country. I have heard kind of on the grapevine that there might be something like an £8,000 per person month rate that might still be acceptable, and anything above that is being cut as excessive. Is there a definite for that?
Normally you should just declare the actual rate of that person, and if it is a very high rate, you just need to be able to justify that this is the rate and that it's correctly calculated, and also that in case it's a very high level person, that this was really needed for the work that had to be carried out for the project. But there is not really some kind of guidance on what can be accepted or not.
And then the second question is around, we are coordinating one SIP project and we are partnering in another SIP project, and two different departments in the Commission are requesting different ways of submitting the personnel costs. In one case, we are submitting now, we have to split the costs by category of persons, so to say here's a program manager, project assistant, and their day rate, and then the person month for each member of staff on that level. For the others, it's submitting the total personnel costs and then just having a list of people and their person months. Again, is there a general ruling or a preferred version how you'd like us to submit the costs?
Yeah, I can comment on this. We're aware of these situations, and as we are running FP7 and SIP for quite some years, the practices become different, and indeed, when it affects one beneficiary who's seeing the different approaches, we started to intervene, and there is, we are having this workshop and these guidelines to our internal staff in order not to go for the details within cost claims, because that's not the real spirit of what was supposed to happen in FP7 and SIP. So we are trying to harmonize there, and I hope in future you will not face these situations anymore. Sorry for that.
Okay, thank you. I have two questions here. The first is related to the final reports on projects. So, for example, if the project ends at month 30, and you still are doing some reporting after that for 60 days, and reporting on the project, and also you go for the final review, are these costs eligible, and how do you report them, since they are being done outside the period for the project? It's just management period, basically. And the second question, I can ask it already, is you mentioned that equipment that is shared by two projects, for example, can be claimed separately in each of them. And we have a similar situation, not with the physical equipment, but with a license for a data management system that we use for both projects, and this was not accepted in a previous claim. So is this actually eligible? So we have a a monthly rate that for a platform that manages 2 of our projects. Can we claim those costs split or not? Thank you.
Yes, so for the license, I think you can declare the share of that license that you use it for each of the projects in the different projects. So that is possible. For the costs after the end of the project, so as I explained, the costs for the final review, the final reports and the certificates on the financial statements, these are eligible costs even after the end of the grant agreement and up to the 60 days after. And you can declare these costs in your cost claims.
I have a question concerning the calculation of productive hours and days, and would like to ask: is this is valid for the? It's an average number for the overall project, right? And not it doesn't change per year, because you have several beneficiaries who would like to change their productive hours and days per year, and request this change. And in this case, we always modify the budget calculator and send it to the project officer.
The productive hours are calculated for each beneficiary separately, so not for the product.
Yes, but if the average number given in the budget calculator for each beneficiary, can this be changed during the project?
Yes, it can be changed, but of course, if in total the total eligible costs will be much higher, the funding will not be changed. Will not be higher than it was initially foreseen. But you can change the average person rate.
Okay, thank you.
Thank you. I have a question concerning subcontractor. Is it possible to change the budget?
It's possible to change the budget also for subcontracting, but this needs an amendment, and you have to discuss this with your project officer. Yes?
It might strange like a very specific question. We have a beneficiary who insists upon claiming the acquisition of a workstation, i.e. a computer, for the office, and we're trying to convince them that that's just business as usual. It's not a specific computer, no specific functionalities. And the beneficiary is telling us, oh yes, but that computer is only used for that project. And it's sort of going around in circles, but I think the lady raised an interesting question of the real questions we're faced as coordinators. So how do we address that? Because they're telling us, yes, but under consumables we're entitled to have it, and it's linked to actions related to the project. So with the depreciation of this in the 4 years of the project, we can claim it. And we're trying to tell them, well, you need a computer to do your work. In that case, your car you drive to the office every morning should also be an eligible cost. And it's going around in circles, and when the beneficiaries come back to us, they quote the guidelines, and the guidelines are extremely unclear. So are you planning to do anything specific for the upcoming year? And how do you suggest we address that? Because we're going around in circles with beneficiaries about this. Thank you.
Well, we think that the workstation is considered as an indirect cost for the project. So even if they say that it's used only for the project, I still think that it should be included as overheads.
Could someone at the Commission side be so kind as to send that in writing?
Yes.
Thank you.
So then let's have a coffee break till, I think, till 12.
Okay, I suggest we continue, but before giving the floor to Anne for the presentation, Inigo will come back on 2 clarifications related to previous questions. And I would like just to say on the participant portal for H2020, you will, I don't know whether it has been uploaded today or whether you could already see it before, but the proposal templates now, they are there. So it is really work in progress, also evaluation forms. And I talked to our person responsible for the evaluations, because everything is in hands of RTD. We are not really mastering, controlling this process. And they say normally before Christmas, other missing documents will be available. So I hope so. We all hope. Then maybe, Inigo, if you can clarify these.
Yeah, regarding the question on receipts, the guidelines provide samples, but what you have to pay attention to, not the samples themselves, are the conditions that each case should comply with, which are accumulative conditions to be considered as a receipt not only in the sense of an income received by the beneficiaries, but also as a less expense incurred by the beneficiaries because of having received free of charge contributions in kind. So to be considered as a receipt to be declared, this contribution in kind has to be allocated specifically, or has to be attributed by these third parties specifically for the purpose of the project. So it's not at the discretion of the beneficiary whether to use or not, or how to use the contribution in kind. And there must be no reimbursement at all from the side of the beneficiaries to these third parties contributing to them, because in this case the reimbursement would be an eligible cost. So specifically, the receipt is an amount that you declare as an income or as a less expense. In case of free of charge, you have to declare what would be the market value. If there is no market value for that contribution in kind, then there's no receipt cost. In case, of course, there's a market value and it's very favorable that value, then you should declare it as a receipt, because the beneficiaries are spending less than they should because they have a third party providing them something that in the market someone else could provide for a price. So that from the side of the receipt. From the question on in-house consultant, I just checked, and in fact, sorry, but CIP allows in-house consultants to be whether self-employed or being employed by a third party. So it's possible? Yeah, it's possible, and not only because I was just focusing on all in-house consultants can be declared as personal cost or as subcontracting, depending on some issues. In any case, they can be declared as personal cost, even though they are not self-employed, they are employed by a third party, but however, the beneficiary can claim them as their own personal cost, fulfilling some requirements. So they have their own employer, but however, they are not submitted to the power of that employer. They are submitted to the power of the beneficiary.
So we will now continue with the reporting requirements. So at the end of each reporting period, the consortium has 60 days to submit the periodic report, which includes the progress report, the financial statements, and the description of the efforts and the resources used for the project, and also the summary financial report. Deliverables, they have to be submitted as foreseen in Annex 1, and all projects also have to include a final plan for the dissemination and use of the project results, and the setting up of a web page which has to be updated regularly. Within 60 days of the end of the project, the coordinator has to submit the final report, including a final publishable summary covering the results, the conclusions, and the socio-economic impact of the project. The coordinator then has to submit within 30 days after the final payment a report on the distribution of the contribution between the beneficiaries. And in this report you will find the amounts and the dates on which the Commission paid the community contribution to the coordinator, as well as the amounts and the dates on which the coordinator has transferred the funding to each of the participants. It is not necessary to submit this report after each reporting period or after each payment, so only after the final payment, unless the Commission specifically requests it. And we do that, for instance, in case of termination of the participation of a beneficiary or termination of the project. After the reception of the reports, the Commission can approve the reports in whole or in part, or make the approval subject to certain conditions, and the payment is made after the approval of the reports and the deliverables. The Commission can reject the reports and deliverables if this is justified, and if appropriate, we can start a procedure for suspension of the project or termination of the project. The Commission can also suspend the time limit and request a revision or completion of the document. So if one or more of the reports of the deliverables have not been submitted, we can suspend the time limit, or if the reports or the deliverables are not complete, or if we need clarifications or additional information, or if we have doubts on eligibility of certain costs, we can suspend this time limit. You will be informed by this in writing, usually by your project officer or your financial assistant. And in this email, you will also receive the conditions that you have to meet to lift this suspension of the time limit. The Commission can also suspend the payment itself. And we have 90 days to evaluate the reports and to execute your payment. If we do not reply within this time limit, it doesn't mean that the reports and the deliverables have been accepted. We can still reject them even after the 90 days. But in case we do not pay within the 90 days, we will automatically pay late interest to you. It's done automatically. Only if the amount is lower than 200 euros, you will have to request it within 2 months after the payment. Otherwise, it will not be paid to you. In case the Commission suspends the time limit, the payment, or the project, you cannot consider this as a late payment. So then the payment modalities, and this applies to all the actions in CIP, so also to thematic networks financed by lump sums and best practice networks. So the funding is paid in accordance with a schedule that has been agreed and that is included in your grant agreement. So in principle, you only receive one pre-financing during the lifetime of your project, and normally you have already received it, because it is paid automatically by the Commission 30 days, within 30 days after the grant agreement entered into force. And normally a grant agreement enters into force when it's signed by the two parties. So this amount of pre-financing is normally 160% of the average funding per period, but it will never be more than 60% of the maximum funding. Then the interim payments, the amount depends on the costs accepted for the period, and the sum of the pre-financing plus the interim payment can never be more than 90% of the funding mentioned in the grant agreement. The final payment then will be transferred after the approval of the final reports. And the amount is the difference between the total costs accepted for the project, the funding that we calculate based on these total costs, and the payments already made, the pre-financing and the interim payments already made. Even if the total eligible costs for your project are much higher than foreseen, the funding that we will pay will never be more than the amount that you find in your grant agreement. And then also at final payment stage, we will take the receipts into account for the beneficiaries, and you will have to confirm that the contribution did not generate any profit for you. So this is an example of the payments done during the duration of a project. So in this example, it's a project of 32 months. It has 3 reporting periods and a total maximum financial contribution of 3 million euros. So in that case, the average funding per period is 1 million euros. And so the 160% of the average per period, which is normally the amount for the pre-financing, is 1,600,000 euros. And then 90% of the funding is 2,700,000, which is then the maximum we can pay as the sum of the pre-financing and the interim payments. So in this example, at interim payment, 1 million euro of costs of funding was accepted. This means that we will pay 1 million euros. In total, this means that we have already paid 2,600,000 euros because of the total of the pre-financing and the first interim payment. For the second interim payment, 1 million euro funding again was accepted, but in this case we will only pay 100,000 euros because then we reach the 2,700,000, which is the 90% of the maximum funding. At final payment stage, we will then pay the 300,000 euros that is left. So for this project in total, then we have paid the 3 million euros, the maximum funding in the grant agreement. So then the certificates. A certificate on the financial statements is an independent report of factual findings, and it's produced usually by an external auditor. And the purpose is to give the Commission assurance that the costs claimed are in accordance with the grant agreement. And it helps also to detect errors at an early stage in the project. Beneficiaries that are financed by lump sums, they do not have to provide any certificates, and this is introduced into the grant agreement by a special condition. And a certificate has to be submitted for interim and final payments when the cumulative amount of the request for payment by beneficiary is equal to or more than 325,000 euros. And the Commission can request, on the basis of an analysis of risk, the submission of a certificate of the financial statement at any time from any beneficiary in the project. And if you have to submit a certificate on financial statements, this does not mean that the Commission cannot do any audits itself anymore. So the auditors have to perform some standard checks, and they have to provide information according to a specific format, and this is defined in the terms of reference. And there they give relevant elements to assess if the costs claimed are in accordance with the grant agreement, but the beneficiary remains at all times responsible for the accuracy of the financial statement. The terms of reference, as well as the compulsory report format, are given in the certificate of financial statements for CIP projects. The link is on this slide. And the auditor also has to make sure that the work is carried out in accordance with the International Standard on Related Services 4400, and this is the engagement to perform agreed upon procedures regarding financial information as published by the International Federation of Accountants. You are free to choose the external auditor that you want, including your usual auditor, and it should be independent and qualified to carry out statutory audits of account documents. If the beneficiary is a public body, then a competent public officer can do the certification of the financial statements. If the national authorities have confirmed that he can do the audit of that entity, and if you can guarantee the independence. So for this, one of the conditions is that the person that carries out this audit, the public officer, was not in any way involved in making up the financial statements for that specific beneficiary. Then the price of the certificate is also subject to the general eligibility criteria in the grant agreement, and you should also consider the relevant market prices for similar services. So the price should be consistent with the requirements of sound financial management, in particular regarding economy and efficiency. So in case that excessive or reckless expenditure is declared, it might be rejected. The auditor should invoice directly to the beneficiary, and he should also put a breakdown of the fees and mention the VAT amount. And again, the VAT amount is not an eligible cost for the grant agreement unless that you cannot recover VAT. You should select this auditor well in advance and give him the necessary documents to do this certification, so the grant agreement, amendments if there were already amendments, and then the annexes to the grant agreement, Annex 1, the description of work, and Annex 2, the general conditions. And then there are also some guidance documents for both the auditors and the participants where the financial provisions of the grant agreement are explained. So when do you have to submit a certificate? You do not have to submit it when the cumulative requested funding amount is less than 325,000 euros, not even at the end of the project. And every time that the requested funding is more or equal to 325,000 euros, you have to submit the certificate. And also if the Commission specifically requests it. For example, if in year 1 your requested contribution is 185,000 euros, no certificate on the financial statements is needed because it's less than 325,000 euros. If then in year 2 you declare 200,000 euros, then you will have to submit a certificate because the total of year 1 and year 2 is 385,000 euros. If then, for instance, for the final period you would claim 250,000 euros, then for the final period no certificate is needed because, again, this is below the 325,000 euros threshold. For certificates, you have to submit one signed paper original and an electronic copy. And the list of minimum requirements has to be included in the engagement letter. The model auditor's report of factual findings has to be issued on the auditor's letterhead and stamped, dated and signed by an authorized representative of the auditing entity or by the public competent officer in case of public bodies. A detailed description and the procedures to be performed by the auditor, as well as the findings expected to result therefrom, should be included. And the language is the language indicated in the grant agreement, and in all cases this is English. So the procedures to be followed by the auditors are compulsory, and they have to note exceptions every time that the findings are not consistent with the standard ones. They have to recalculate the hourly rate and the overhead rates for personnel based on the actual payroll information and the productive hours. They have to describe the time recording system used, and they have to check the individual timesheets. They have to check the employment status and the employment conditions, so the specific employment contracts and for researchers in question in your project compared to the standard contracts for your other employees. So exceptionally, the grant agreements foresee that you can claim personnel costs in accordance with normal practices. This is based on average costs. And this has to be identified and agreed at negotiation stage, and it can be implemented in the grant agreement through a special condition. This means that in case that you are that you have this special condition for average personnel costs for a certain beneficiary, and that this beneficiary has to submit a certificate, that the certificate also has to certify that the personnel costs used are claimed, and that these average personnel costs claimed are not significantly different from your actual personnel costs. If you have been granted the certificate on the methodology procedure in FP7, then this is also valid for CIP. And in that case, the auditor will have to certify that the methodology used for the calculation of average of costs is in line with the methodology that was accepted under the FP7 grant agreement. So for subcontracting, the auditor has to obtain the tendering documents for each subcontract, and he has to check that there was a written analysis of that the best value for money was prepared by the beneficiary, and that it was part of an existing framework contract. For equipment, the auditor has to confirm that it has been depreciated according to the normal practices of the beneficiary, and that travel and consumable costs can be correctly identified and allocated to the project. And they should also obtain the company policy on the travel costs. The auditor has to be able to trace the costs charged to the project to the accounting records, and has to check the original invoices. So the auditor has to compare the exchange rate that you used for the conversion. So in the financial statements, the costs always have to be declared in euro. And you have to convert the costs that you didn't incur in euro according to your normal practices. If you have your accounts normally not in euro, then the costs that you report should be, you should use a conversion rate that is published by the European Central Bank, and that is applicable on the first day following the end of the reporting period. And then the auditor also has to examine the possible sources of income related to the project. Then we come to the audits, the controls, and the technical reviews. So the Commission has the right to organize technical audits. And in the afternoon, the presentation about reporting will go in more details, because these are the scientific audits that are done at the end of each reporting period. In addition to that, we have the financial audits, because the way we work in CIP, you declare your costs. We do not ask any invoices or proof normally that you really have incurred these costs. So it's a trust-based system. And to check if this is really working, we do from time to time audits, and these are normally done on a participant basis. So the auditors will then ask you to make available all the documents that they need to check, so the invoices, the timesheets, and so therefore you have to make sure that the cost claims match what you have in your accounts, and that you have the necessary proof for that available. And the Commission has the right to do these financial audits up to 5 years after the date of the final payment. And that means then, of course, that you should keep all these documents at least until 5 years after the final payment. We can do these audits ourselves, but we could also have an external audit company that carries out these audits on behalf of the Commission. And on top of that, sometimes OLAF might carry out some audits in case of suspicion. For example, OLAF is the anti-fraud section of the Commission, and they can do this audit, or the European Court of Auditors. They can also, they have also the same rights to do these audits, and they again can do the audit themselves, or ask an external auditor to carry it out for them. And then the result of these audits will be that you will either have to pay back money to the Commission, or that the Commission owes you still some money. If you have to pay back money to the Commission, we will issue a recovery order and send you a debit note.
Thank you. I have a question regarding the technical review. You stated up to 5 years after the end of the project, there's a technical review possible. What does it mean correctly? Does it mean that you come there and look if the pilots are still running, or do we have to keep up the environment and technical environment so that you decide 5 years after if it's still standard or something like that? So please, could you clarify that? Thank you.
It's foreseen in the grant agreement, but it rarely happens, and when it happens, it's in relation to a financial audit. So it is that technical people or a project officer from that project is joining the auditors, which are joining the financial accounts, and asking more technical questions to the people who have worked on the project. So if a pilot is not supposed to still be in place at that stage, these things cannot be assessed anymore. That's not the purpose of the technical audit. It's more in line. It's to verify whether the cost claims were really actual and had happened. So it's to assist the financial audit. And it's at beneficiaries level. It's never in a project context.
Okay, so if an amount paid by the Commission to the coordinator has to be recovered, then the coordinator should make sure that he pays back. And in principle, other beneficiaries in the consortium are not responsible for the reimbursement of a specific amount, unless in the grant agreement you have the special condition for joint financial responsibility. If the total amount of funding that was paid is higher than what is in the end accepted, we will also ask reimbursement of the difference. And it might also happen reimbursement of part of or even all of the funding in case of termination of the grant agreement or termination of the participation of a beneficiary. The Commission can also recover amounts by offsetting, and in addition to a recovery order, we also have the obligation to apply damages and penalties. If a beneficiary overstated an amount, he will have to pay damages, and the amount of damages is calculated as follows. So the overstated amount is divided by the total funding claimed, and this result is multiplied by the unjustified funding amount. And then finally, there is another article for the more serious cases, where the Commission can, for those serious failing to meet the contract obligations, we can apply penalties, and they vary between 2 to 10% of the EU funding. And here we are really talking about fraudulent cases or fraud with documentation, for example. For thematic networks, the Commission can recover up to the full amount of any undue payments where the event has not occurred. For example, a beneficiary did not contribute to the project. And in case of false declarations made, the Commission may also impose financial penalties up to 50% of the total amount of the lump sum. And then it's more about how we will do the payments and what you will have to do to get this payment. So during the life cycle of your project, we agree certain details, as you have already seen in the presentation of the IT tools. So we collect these data from the participants online, and we need some of the information to prepare your grant agreement, and then other information is needed for the management and the reporting of the project's execution. So we request you to provide this through online electronic tools, and they are accessible through the participant portal, as explained this morning. So the portal uses separate modules to implement these electronic fields, electronic forms, and this depends on the need of the Commission. So NEF is one of these modules, and you can use it for negotiations, amendments, and payments. So the advantage here is that a lot of the information will already be pre-filled, and there will be less errors that can still be made, because the name of the beneficiary will already be there, the dates of the reporting periods will be pre-filled, And we will also reuse the information that you key in for the payments. We will reuse that to prepare the actual payment. Also, as my colleague explained in the IT tools presentation, NEF carries out a number of checks already, and this results in a warning report. So some of these warnings might block and might block you to continue and to submit a session, but others are just warnings, and you can even continue. For instance, if it will give you a warning if you submit your financial statement without a certificate, even if you have passed the threshold. But it will not block you. You can still submit it, but it just wants you to know that you have then submitted without this certificate. So the Commission then opens a NEF session at the end of the reporting period. And, but you can already start preparing your periodic report outside NEF before that if you want. And the coordinator will receive an email from the Commission once this session is opened. As my colleague explained already, you cannot have an amendment session and a payment session open at the same time. So if the amendment has no impact on your payment, then it's best to ask your project officer to close the amendment session and to open the periodic report session. So you can access NEF through the participant portal, and you will find the links to your project in the My Project tab. The coordinator has the full access, full writing and editing access to the data of himself and the other participants, and the beneficiaries only have access to their own, editing access to their own data, and read-only access to all the other data of other beneficiaries and to the general project information. And it's only the coordinator that can submit the NEF session. Once the session has been submitted, the Commission will verify if all the information is there. If the information is not complete, we will create a new NEF session, and then you can further complete the information as requested. If it is complete, then we will send you a PDF with the financial statements for you to sign. You will have 15 working days to sign and send these original financial statements. And the eligibility of the costs is checked once the progress report has been submitted. Yes?
I have one small question. It's again some small procedure. You have this, when all the beneficiaries put in their financial statement on the NEF, then automatically a PDF document appears with draft on it. But then if I read the guidelines, so it mentions all the beneficiaries, all their costs and expenditures, and then we also have to give in the same data in an Excel sheet. So I was wondering why, because that's double work for the same information, or am I?
No. The amounts in NEF, and indeed it will generate this draft form. But once that the Commission has verified if the information is complete, then we will send a PDF with the final version, so they will not anymore mention draft. And that are the documents that each beneficiary has to sign.
Yes, I know, that's what I explained, but when I had to submit my periodic report and then submit all these, close down the NEF, then according to the guidelines, I also had to submit a document in an Excel sheet who explains all the use of resources in one Excel sheet. So it's also, there's a template sent around, yeah, who says beneficiary. It's actually what appears in the document. It says that you can fill in, that you can complete with personnel costs and work package, and yeah, that in which you explain all your eligible costs.
Sorry. Oh, no.
I think it's what you refer to is the use of resources, in which you explain the costs that are in the financial statement. So in the financial statement itself, the cost you have introduced in NEF is just the total amount for these categories: personnel costs, subcontracting, other specific costs, and the indirect costs. In the use of resources, you further detail these costs and explain what is needed. So the major cost items have to be explained in the use of resources, and that is indeed a separate report, but you do not have to sign, each beneficiary does not have to sign these forms. Okay. So for the Commission, the financial statements are the basis of any payment. So we need to receive the originally signed financial statements, unless, of course, you have requested the amendment for the electronic submission. And for thematic networks financed by lump sums, they do not have to report the costs, and there is no obligation either for the certification of their costs. The payment of their funding is made on the basis of the approval of the reports. And thematic network actual costs, they report their costs in the same way as for the pilots. So as I already explained, the financial statements are filled in and generated online with the help of NEF. And it automatically presents then the information in the correct template. And you all have to fill it in NEF and upload then the certificates on the financial statements if this is required. And then you have this explanation of the use of resources report in the periodic report. And the guidelines there suggest a tab per partner, a table per partner. And NEF provides a facility also where you can do the justification of that part. But the information is not automatically duplicated in the narrative part of the periodic report. So we suggest you to follow the same structure as in the periodic report. And you should pay attention to that NEF and the periodic report are consistent. So you should indicate in this use of resources the person months worked. So the person month should also be consistent in all the tables that you use in your report. And for subcontracting, you should explain the type of the work and the contractor. And then for the other categories, you should explain the major cost items in this report. So as I said, NEF automatically does some controls. It checks if your indirect cost model is correctly calculated, and it calculates automatically the maximum funding. And it gives you then warnings when you try to submit, but you can still correct. So you get a warning, and then you can correct, and then you can try to submit again. Please make sure that in this box, requested community contribution, that each of the beneficiaries there really puts the requested community contribution, and not, for instance, the planned funding for that period, or that they leave it open, because we can never pay more than the amount that is requested in this box. And in case you would like to do adjustments to previous periods, then you have to use a separate financial statement per period where you want to do adjustments to. So then in the tab Other, you should declare if you have received any receipts. And it's good to remind your beneficiaries in the project that this is the receipts in the sense of the contract, and it's not, for instance, the funding that they have received before from the Commission, like, for instance, the pre-financing. In case that a certificate on the financial statements is required, then you should report here in this tab also the name of the auditor and the cost of the certificate. And you should make sure that each beneficiary that has to submit a certificate on the financial statements submits the 3 parts of the certificate, so the terms of reference, which should be dated and signed by both parties, by the beneficiary and the auditor. And then the report on the factual findings, which should be issued on the auditor's letterhead and dated, signed and stamped by the auditor. And then the procedure performed by the auditor, again dated, stamped and signed by the auditor. And if relevant, if you have already received a first interim payment from the Commission, there might be some remarks to that first period, and it is good then in the second period to clarify some of these things, or to do adjustments to previous periods in case some of the costs have been rejected because of missing clarifications also. So then in the tab signature, the financial statement has to be signed by an authorized representative within your organization, and you have to send the original to the Commission. For financial statements for thematic networks actual costs, it is similar to those for the pilot costs, but for the best practice networks, it is also similar, but they do not have to declare any indirect costs. Then the coordinator normally has to send one paper original and one electronic copy of the periodic report, and of the and they have to provide the electronic copies through NEF. Only in case you have requested this amendment for electronic submission. In that case, of course, you do not have to send us any originals anymore. Then the cost claim input of each of the beneficiary, as well as the summary financial statement and the certificates for the financial statements, if they are required, they should be included. For thematic network lump sums, only a simplified summary financial report is needed, and I will explain that a bit later. For all types of projects, you need to submit a self-declaration of the coordinator, a publishable summary, a project progress report, and the use of resources, and this should be uploaded in NEF. So this declaration that should be signed by the coordinator declares that the periodic report is an accurate description of the work carried out for the project. And the coordinator should then also tick a box if the project has achieved his objectives or technical goals for the period, or that it has achieved most of the objectives and the technical goals for the project with relatively minor deviations, or that it has failed to achieve the critical objectives and that it's not at all on schedule. Then the coordinator has also to confirm that the public website is up to date, and that to the best of his knowledge, the financial statements are consistent with the report on resources used for the project. And this should only be done for the pilot projects. So this is something that was explained already in the earlier presentation. It's what the financial statements look like in NEF. So the participants there is some kind of mechanism in NEF which allows the participants to notify the coordinator when they have finalized their contribution. So there is some kind of flag set when the beneficiary's contribution is finalized, so that the coordinator knows that he can submit the session. The coordinator can also finalize contributions on behalf of the beneficiaries, as he has the full editing access. And he can also submit the session even if not all of the contribution have been finalized. And we provided this facility for your convenience, so in case that the beneficiary is not reacting in time, that you might be able to submit and without the contribution of this beneficiary. The coordinator then remains responsible for the data that have been sent to the Commission. Yes?
Earlier this year, in submitting a cost statement, I found that the facility for the coordinator to finalise other participants' cost statements was withdrawn, and only the participant could finalise them. It arose at the time they introduced the concept of financial signatories.
It's been for 2 years like this for us. For us, it was 2.
Since October 2011. 12.
Yeah, well, I was not aware of that, but we can check that with somebody from the IT tools. But in case that you want to submit and one of the contributions has not been finalized, you can still submit the financial statement the way it is. So if nothing has been filled by this beneficiary, then it will be a zero financial statement. And in that case, if the beneficiary then wants, for instance, for the next period, he can still make adjustments to that period and still claim the costs. So the coordinator has to collect then all the signed original financial statements, and he sends the periodic report and all the signed originals to the Commission. We will then check the costs, and also we will check if all the financial statements are really originals, and if everything is okay, we will then do the payment. Once the payment has been done, you will also receive, well, the coordinator will receive an email to, which mentions the amounts that we will pay to you. Then for the thematic networks financed by lump sums, so this is a simplified process because it's based on the lump sums and the flat rates based on scale of unit costs for the coordinator. The thematic networks do not have to submit certificates on the financial statements, and the provisions in the grant agreement regarding eligible costs and the justification of the costs by accounting and invoices, for instance, does not apply to this type of project. And they do not have to declare receipts. A special condition is inserted into the grant agreement for this, which allows them, for instance, not to declare these receipts. So thematic networks are not really exempted from submitting financial statements, but it's only the coordinator that has to submit a simplified summary financial report. It's in fact the declaration of participants having actively participated in the project. So he confirms whether each of the beneficiaries has participated in that specific period or not. And based on that information, they will receive the lump sum for that period. The summary financial report has to be signed and dated by an authorized person of the coordinator. So this is what the coordinator will see in NEF for the thematic networks. It's simplified. In case of the coordinator, it depends on the number of participants in the project and on the duration of the specific period. So this is where the coordinator then in NEF confirms if the participants have participated or not, and automatically then an amount will appear that is calculated by NEF, so for the implementation costs and the attending of meetings. And actually this then is a bit a summary of what I have explained so far. So most of the errors in the financial statements occur because of a misunderstanding or because of lack of attention to the details in the grant agreement. So all the costs that you claim in your cost statements must be actual costs. They should be supported by proper documentation. They should not be budgeted, estimated amounts. You should not charge the full amount of any equipment, but you should depreciate it over its useful lifetime and spread the depreciation costs over the duration of the project. You should calculate a correct hourly rate and make sure that you have a reliable time recording system for all your employees, and you should sign and have the time approved. You should not charge any costs when a person is on leave or when he's attending conferences that are not related to the project. So as I explained before, it is allowed to charge average personnel costs if it reflects your usual accounting practice, but they should be based on actual personnel costs, and they should exclude any ineligible cost items or any items that you have that you would normally declare in other cost categories. If you cannot meet all the criteria for average personnel costs, then you should of course declare actual personnel costs. And then SME owners can, as I explained before, choose to declare salary in case they normally have a salary, or if they do not normally take out a salary, they can use the flat rate and declare that for the project. And then finally, VAT is not an eligible cost unless the beneficiary can show that it's unable to recover it. So normally you should exclude VAT from all your cost claims. So that was the presentation about the financial issues. You can find more information on Europa, on the participant portal, or in the grant agreement, in the core grant agreement, or in Annex 1, description of work, or in the general conditions, Annex 2. And then there is also the Guide to Financial Issues, and this guidance document contains also a lot of practical examples. And then there are also some guides for the auditors. And if you have any specific questions, your first point of contact should always be your project officer or the financial assistant. And I advise you to contact them as early as possible, as soon as you know that there is a question or a problem, because then it will be easier to correct things or to solve your problems. So do you have any other questions? Yes.
First of all, I would like really to congratulate you for an extremely clear presentation. I know that it's not easy with so many information to pass to us. Actually, it's not a question, it's just an observation. We've been involved in two audits in the last 10 years, and we have also supported another partner for the audits. And it seems that overheads is extremely confusing for auditors, and they have no standard rules for calculating them. So actually, the three audits we had very different views from the auditors. So I think that at the same time, when you have an internal seminar to explain to the different units how to ask a report, I think you should do really an effort to inform them about the views of the European Commission about it, because honestly, they do not seem to perceive in the same way the calculation of their hands.
Okay, thank you.